Hello and welcome. On the show today, facing the Naira's record low, Nigeria eyes a controversial move, blocking cryptocurrency platforms like Binance, as officials suspect these platforms are facilitating illegal Forex activities and money laundering, contributing to the currency's decline. Ghana's President Akufo-Addo has urged his African counterparts to withdraw a certain percent of their public funds and assets from foreign banks and deposit them in African financial institutions. Also today, we will examine the relationship between gender equity and tax equity. This is Business Edge. I am Perpetua Fason Repeater. Despite the Nigerian government's crackdown on foreign exchange speculators, the Naira's value continues to fall in the parallel market. Raids were conducted on bureau that charge hubs in Abuja, Lagos, and Kano, leading to arrests. However, the Naira's value dropped further, with a dollar now trading for 1,900 Naira in Abuja and Kano and 1,800 Naira in Lagos, while the British pound was exchanged for 2,250 Naira. However, at the official market, the Naira recorded a marginal gain, closing at 1,551 Naira 24 kobo, as against the earlier 1,574 Naira 62 kobo, according to the Nigerian Autonomous Foreign Exchange Market, NAFEM. 2 weeks after President Bola Ahmed Tinubu instructed the Minister of Agriculture and Food Security to release 42,000 metric tons of maize, millet, and other grains, the aim was to address hunger, which had sparked protests in some states. Following the directive on February 8, Minister of Agriculture and Food Security Abubakar Kyari announced at a press conference in Abuja that the grains will be distributed free to the needy. However, as of yesterday, checks in several states showed that the grains had not yet been made available for distribution, while NEMA stated that it was in talks with the Agriculture Ministry regarding the issue. Government officials claimed there is not enough grain reserve in the country, prompting suggestions for importation of grains and investment in agriculture to tackle food security challenges. And in Southern Africa, ESCOM has announced the escalation of rolling blackouts to stage 4, effective from 4 a.m. on Thursday morning. The power utility had previously suspended load shedding during the day for the rest of the week. The escalation is attributed to the loss of 6 generating units across the Kendal and Duva power stations in Mpumalanga, according to ESCOM. The utility has stated that stage 4 load shedding will remain in place indefinitely, indicating the severity of the situation and the challenges faced in maintaining a stable power supply. This development underscores the ongoing strain on the power grid and the need for comprehensive measures to address the underlying issues impacting the energy infrastructure. These are the business stories we're tracking at this hour. We'll take a break now. When we come back, we'll bring you our first conversation for today. Well, we'll bring you the market watch first before the conversation. Stay with us. After tumbling in the first 2 trading sessions of the week, Nigeria's equities market staged a much-needed comeback on Wednesday as investors flocked to undervalued stocks, pushing the Nigerian equities market up 165 billion naira. But we'll take a look at the figures now, starting with the all-share index. Let's see what we have there on the all-share index. And looking at the all-share index, we recorded again, this is the very first one in the week. Monday down, Tuesday down, but Wednesday there is a gain, and that is 0.30% change, with the all-share index ending at 101,362.38. And now we'll also look at market capitalization. And of course, market capitalization will record the same percentage change, where we saw the market capitalization increasing also by 0.30%. Let's have the market capitalization so we can see what we're talking about. Okay, and of course, it ended at 55.46 trillion naira. And looking at the market, we'll start probably with the gainers for yesterday's market. The top gainers, we have FBN, 28 Naira 70 kobo after gaining 9.96%. We also have Julie, 1 Naira 94 kobo after gaining 9.60%. And this is a stock a lot of persons are probably, looking at because it has gained so much from the very beginning of this year till this moment. And all eyes are still on it, watching to see what's happening there. For mutual benefit, it closed yesterday at 70 kobo after gaining 9.38%. And Regal Insurance, 44 kobo after gaining 7.32%. Bois Cement 150 Naira after gaining 4.93%. Now let's take a look at the losers. For the top losers yesterday, Okomu Oil, 243 Naira. That's what it closed with yesterday after getting 10 Naira. For Morrison, 2 Naira 5 kobo after losing 9.69%. For Sterling, 4 Naira 34 kobo after losing 9.58%. The Port Gold, 2 Naira 33 kobo after losing 9.34%. And Keverton closed yesterday at 1 Naira 68 kobo after losing 9.19%. We see that when you look at, the percentage loss, it's much more than what we saw when we looked at the percentage gain. But now let's take a look at the sectoral performance. So we see the price movement based on sectors. For banking was up 0.31%. Recall that on Monday and Tuesday, banking was down. Insurance still down today, minus 2.5%. Oil and gas, of course, it was up yesterday, the day before yesterday, beg your pardon, that was Tuesday, and it's also up today. It's also up, yesterday, 0.07%. And that's a good one for the oil and gas sector. For consumer goods, still maintaining the negative run, which is minus 0.24%, and industrial goods is up 1.60%. So that's the sector performance, and that, of course, is what we're seeing in the market. The market is open today, and we're looking forward to what will happen, if this bull run will continue or will it go back to, the bearish run. But we hope for the very best. We'll take a break now. When we come back, we'll bring you more on the show today. Stay with us. Glad to know you're still with us. The Nigerian government is reportedly contemplating a bold move to curb the free fall of the Naira, blocking access to online platforms like Binance and other cryptocurrency firms. This unprecedented step, revealed by sources with knowledge of the policy option, aims to tackle what officials perceive as rampant manipulation of the foreign exchange market and the legal movement of funds through these platforms. Joining me for more on this is Babatunde Obadero, the CEO of Zitra Investments. He joins me virtually. Hi, Babatunde. Thank you for joining me today.
Hi, thank you so much for asking me to join you this morning. I'm delighted to be here.
All right. So let's begin by clarifying the legality or otherwise of Binance continued operation in Nigeria. I think it's okay we begin from there.
Yeah, that's okay. So talking about legality, the two authorities that are mandated by our law in Nigeria to supervise and regulate our financial service space are the Securities and Exchange Commission, as well as the Central Bank of Nigeria. So as far as Investments and Securities Act and the BOFIA are concerned, those are the two institutions to talk to. And so let's ask ourselves what these two institutions have done on either Binance or related entities or related companies in Nigeria. So we'll go back let's start with the SEC. The SEC, through a circular issued middle of 2023, specifically asked Binance not to do its business in Nigeria. Its reason was that it was not regulated by it, nor registered with it. So that already spells out what the SEC position on Binance is. If we look at the Central Bank of Nigeria, the Central Bank 2 years ago issued a circular disallowing banks to open or allow operations of accounts that are for the purpose of cryptocurrency trading or holding of cryptocurrency. Well, instructively, 2 months ago, the Central Bank has lifted that ban, or at least lifted that ban a couple of months back, but included a caveat. The caveat was that it restricted banks themselves from trading, holding, or paying out in cash proceeds of cryptocurrency transactions. So as far as legality is concerned, the SEC says it is illegal for Binance to operate within our sphere. I think that is clear now. And now it's important because of the noise we've seen online and seen in Nigerian media, that's not a new thing. The SEC said that to at least 6, 7, 8 months back. So it's not in any way a new cycle.
Absolutely. Let me come in here, Babatunde. Now, isn't it a dereliction of duty on the part of the regulators to have allowed this particular firm to continue operating without being registered? After all, SEC has guidelines for registration and all of those things.
Okay, that's one way to look at it. But the other way to look at it is, look, the SEC's job is to provide guidelines. They have done that. They've asked entities who seek to do securities or investment business in Nigeria to do X, Y, Z, whether with regards to seeking approval for their operations within our space, our geographical space. I think it would be an overreach of some sort for us to ask the SEC to maybe go cap in hand and beg Binance to come and seek registration or approval. What they've done, based on their mandate, is to issue a communication to the investing public to say, look, if you're going to don't do the business with these guys because X, Y, Z. And I think that's what that's what the law requires of them, and that's what they have done. And they've also communicated to that entity the same information as well.
All right, let's look at, the crux of the matter right now. It's important to me that we try to, demystify this and look into the concerns of the federal government. First, it talks about speculators and money launderers' activities, which contribute to weakening of the Naira on that platform. And it also talked about patronage by, criminal groups for payment of ransom. And it talked about the fact that, these firms routinely deploy, are routinely deployed for manipulation of Forex values through fake deals that either increase value or even cause a fall. Could you speak to these and the effect this could have or is currently having on the Forex market?
I think it's clear to all of us that we've seen a lot of volatility in the FX market in Nigeria. We've also seen a very rapid depreciation of our Naira. What we all want is a stable currency. We want a stable currency that is worth what we expect it to be worth. Now, I would always, on any day, take stability ahead of any other factor, because I think that that's what's most critical. The reality is that lack of stability impairs planning or proper planning. So fundamentally, I may disagree fundamentally on whether we need a strong Naira or not. And of course, that's not your focus this morning. But it's obvious to all of us that whether we call them speculators or they are money launderers or any other criminal group that you've mentioned in your question, we know that these groups will distort the market. Now, these groups will distort any market. That's not unique to Nigeria. So the preference for every one of us and every good intentioned citizen and everyone who says that they support free market is that we should have legitimate demand and legitimate supply. And we want those two things to be the primary driver of our currency's price or commodities price. Well, our currency is not a commodity in this context, but the fair.
Okay, Babatunde, very quickly, because of time.
To drive price.
Babatunde, very quickly, because of time, do you agree with the federal government that these activities, which I have outlined in my question, are carried out on this platform and others like it? I mean, put more broadly, do you see their activities as a sophisticated money heist, something like that?
Look, that question, I understand, where how you're looking at it, but Binance has a right to operate in jurisdictions that have allowed it to operate. Calling it activity money heist might be a bit of a stretch. But the activities of people on its platform, on the other hand, is neither here nor there. We all know that this alternative money, as you may call it, has allowed a lot of things to take place in the dark web and similar places. So yes, it is fair to say that some of the operators may not be people with good intentions. But I think rather than focus on that, we should keep our eyes on how we ensure that we deal with the more important things that may be responsible for the devaluation of our currency, as well as this, of course. But our eyes should be more on the things that are obvious to us all, that are the major drivers of our currency devaluation.
What are these major drivers that we should focus on? You mind talking about them in 30 seconds?
Yes, please. So look, I am not saying that that's not one of the reasons. What I'm saying is it the only reason? Could there be others? Are there people in the public and private sector who have a strong worry about the volatility of our currency? Do they feel the need to hold our Naira, to hold their currency, their monies, their working capital in dollars instead of Naira? Is even government actors responsible, not for illegitimate reasons, but even legitimate concerns, like in order to ensure that they can execute on their mandate? Look, this is a bit of a chicken or egg situation. Which one comes first? Are we going to focus on just the demand side? Are there supply solutions that can address our situation? But we know that it's possible for us to talk and chew gum at the same time. But I would like us to pay more emphasis or more focus on the supply problems or the supply side problems that can address.
All right, Babatunde, we need to go now. But before we go, I want to probably play the devil's advocate. Now, while one might, want to blame Binance for operating without registration, let's also look at the solution it sort of provides for its mostly young users who are only trying to store value in the face of roof-high inflation and currency depreciation. Would this have been a problem if this particular platform was registered? The fact that, people just want to store value. Where do we draw the line? How do we strike a balance?
Very, very good question. I think the onus is on Binance to sort out their registration business in Nigeria. I think that Nigeria represents a major market for their business anyway. And the reality is that elsewhere in the world, they've been made to comply with the rules and regulations of the sovereign nations where they have played. So yes, cryptocurrency has become a major store of value and an important means of exchange as well. But it is, in my opinion, it is critical for them to engage with the relevant players in the sector. I mean government, and for them to have a better appreciation of the users of this cryptocurrency. But the onus lies on the company itself to interact and engage with the regulators and
all right. Thank you so much, Babatunde Obadero, CEO Zitra Investment. Thank you for your thoughts on the show today.
Thank you so much.
All right, we'll take a break now. When we come back, we turn our attention to Ghana. Stay with us. Ghanaian President Akufo-Addo is advocating for African nations, including Ghana, to withdraw a minimum of 30% of their public funds and assets from foreign banks and deposit them in African financial institutions. The president emphasized that the current global financial architecture is unfavorable to African countries and hinders development financing. He further proposed investing at least 30% of each African state's sovereign reserves in African multilateral institutions like the African Development Bank, AFDB, and the African Export-Import Bank, Afreximbank. He linked this call to lessons learned from the COVID-19 pandemic's challenges in accessing development finance for economic recovery. Joining me for more on this is Paul Yofrimpong, Development Economist and Executive Director, Africa-China Center for Policy and Advisory. Thank you, Paul, for joining me today.
Thank you. Thank you for having me.
I mean, let's start with this. What do you make of the president's recent call, to his African counterparts?
Well, I think the call is timely, and I think the platform where he made the call makes it even more exciting in development. And I think it fits into some developing advocacies happening around how the global financial architecture has been structured and how our African continent and most developing countries, of course, African continent are marginalized out of this system. And the call for these global financial architecture to be revisited and drastic changes to be made, across the board, because we cannot keep having a conversation about how to mobilize financing and the funding towards African development and how much Africa needs, the gap that we need to fill in terms of investment and financing gap. We cannot keep having this conversation when the very system the platform, the very system that created the platform for this conversation is the cause or can do something about this situation. So for me, I think it was brilliant. The timing was good, especially at the AU summit where the continent is even trying to come up with another multilateral institution called African Investment Bank, in addition to the AFDB, the African Bank that we have, as you mentioned earlier. So I believe that it was a good call. And again, it connects to the recent advocacy that's happening around why there has to be a change in the existing global financial architecture. And for me, if you give me the chance, I can share more light on what is wrong with the current system and what can be done about it.
All right, let's look at this now. Why are these funds, deposited outside Africa in the first place? To what end is it, and what had been, the gains or otherwise so far?
Well, I think it's got to do with some of the, historical, structures that the continent, had going back to the colonial times, the kind of some of the deals that some of the countries had to sign to get their independence. It's all linked to that. When countries were trying to gain political independence, of course, there were some economic short changes that they had to do at the time to be able to gain independence. It wasn't given as we've seen. So obviously some of these are structured in that kind of format. Of course, even at the advent of the launching of the Bretton Woods Institution in 1944, which is the IMF, the World Bank, and sister institutions, some of these economic underpinnings were also made to some of these countries, and we have to sign on to it, right? I mean, it's not that all countries, of course, I've given an example of Ethiopia, for example. Ethiopia is a country, of course, we all know is the only country that was not colonized in Africa. Again, we'll look at Ethiopia as we speak, where the AU is, where this summit happened. They do not have foreign banks in Ethiopia. So everything is done in Ethiopia. So all the investment, everything, all the money stays in Ethiopia because they've not liberalized the financial service sector to allow foreign banks to operate in Ethiopia, right? And they're doing it. I mean, we can see that Ethiopia is not doing that bad compared to some other countries in the continent. So that wisdom that we needed to secure our future by shoring some money in these foreign lands, as a result that we believe that they have strong economic underpinnings that can back some of these assets that we have. Now, clearly we can see that that's not the case because we all at risk at various levels. We saw what happened with COVID-19. All the countries in the world are suffering and still suffering. So nobody is immune to any such shock. So why then do we still have to keep monies out there when we need investment in our country? Even if you don't trust, as you mentioned, that countries themselves can really manage these kind of reserves well, we can channel them through some of the multilateral institutions that we are all setting up, that we are all depending so much on, right? We take the African Development Bank, for example. They are the single and the leading multilateral investor in Africa's infrastructure financing, in the continent, right? Apart from the ones that come from other third parties like China.
All right, Paul, let's bring this home. You mentioned Ethiopia the other time, and I would like you to, talk more about some lessons that we can actually get from Ethiopia's, practice.
Yeah, I believe that the conversation is beyond just the Ethiopian example. Of course, that is the economic and the political right to decide that, okay, at this point in our development journey, we are not going to liberalize our financial services sector to allow any foreign players in the sector. Of course, they have liberalized other sectors that other foreign companies are all operating. So for them, I think it's purely for them, countries that have already liberalized their financial service sector, like Ghana and other countries, of course, we just have to back it with some relevant rules and laws that we believe will secure the financial future of our economies. But then again, as I said, this core, which is very important, as I said, it connects to everything that's happening to Africa at the global stage. Remember, last year, Africa was allowed or accepted to join the G20, now G21, and there are a lot of changes that have been made, right? Because even when countries on the continent are facing debt-related issues, and they approach some of these frameworks that are supposed to expedite, some of these restructuring of the debt and what have you, the countries have to stay in line for about 3 years because they are from African countries, right? In Zambia, the case of Zambia was there for 3 years. Ghana, we struggled for a couple of times. We have to go to the IMF for bailout before we're able to get a deal with the common framework, right?
Okay, Paul, I think it's time to... Okay, thank you. I think it's actually time, we started looking at the impact this move will actually have on African countries if they yield the call. I see you're already going there. So what's the impact? What are the things, we're expected to see should African countries yield to this particular call within the continent?
I think it's very simple. The impact is that we need funding. with a huge financing gap on the continent of Africa. We need funding. There's been calls and calls and calls. We try all means. Countries are under distress, right? But we cannot have assets sitting outside of the continent when we are suffering back home, right? So the core is, can we increase the quota? Can we reduce the quota out there and bring it back home through our own structure system that we trust? Because some of these institutions that he mentioned, that the AFDB, the President Bank, are Pan-African institutions that we trust. They're already delivering by their own resource mobilization, of course, contribution to member countries. But if we can increase that, it will be good for everyone. So I believe that's the first impact that we're going to see. Again, that can also develop into conversation about our membership in other multilateral institutions that also provide funding, like the IMF, right, like the World Bank. What is the quota of African countries in these institutions, right? And how can they also increase the African continent's share in that? That will also bring in more financing whenever we have to, the special drawing right. I mean, where we can draw on money that are sitting in the IMF. There's a small quota for the African continent. So for me, I believe that for the economic gains, it makes sense. We need funding. We have assets sitting out there. Why don't we plug into that and bring some home through our own channels so that we can get access to more funding to develop the continent?
All right, I like how you've talked about, the development banks in Africa already. And then first, I'd like to ask you if these banks are actually living up to, what is expected of them. And if not, what are the limitations and how can we address them?
I mean, on the surface, you can see that they're doing well. I mean, they've been at the forefront. I mean, like I mentioned, the African Development Bank, they've been a key financier in terms of the continent's development. They always have the funding, doing billions of dollars, saying that they are leading, they are supporting a lot of countries on the continent. I believe on the surface they're doing well. I think they need more capacity in terms of the pool of funding that they can have access to. And Africa can actually lead that charge. The continent, the leadership can lead that charge to ensure that these multilateral institutions that we just mentioned can have access to more funding. Our own money sitting out there that we can get. The contribution that we are making to the IMF, the World Bank, we can advocate, ensure that we advocate to show that there's a reform at that level so that we can bring in more funding from that source to support. As it stands now, advanced or developed markets get access to more money than the entire Africa. In fact, Germany as a single country has access to more money to the IMF than the entire African continent of 1.4 billion people. How can that be? When we know that when you check the economic realities, the African continent needs more money, more funding than Germany. But Germany receives more from the IMF than the African continent combined. So that conversation needs to be had. And if you're able to push for such advocacy for that reform to happen, then we are going to be arming and also improving the activities of these multilateral development bank, the AFDB and the African Bank.
All right, thank you so much, Paul. We have to anchor here. Thank you, Paul Frimpong, for sharing your thoughts with us today on the show.
Thank you for having me.
All right, we'll take a break now. When we'll come back, we'll bring you the gender tax conversation. Stay with us. Glad to know you stay with us. The Knowledge for Development Unit of the International Center for Tax and Development Institute of Development Studies has decried the availability of a limited but growing body of literature on the gender effects of taxation. Most of the available studies are from the global north and relate to details of direct personal income tax policies and indirect taxes, while from the global south, there are few empirical studies that look at taxation through a gendered lens, and they tend to focus on indirect taxes such as value-added tax and direct taxes such as small business taxes or informal taxes and fees. Joining me is Varsha Singh, the head Strategy, Planning and International Cooperation, African Tax Administration Forum. Thank you for joining me today.
Good afternoon, and thank you for having me on your show today.
Thank you for joining us. Now, let's begin with the topic of this conversation. There are two broad concepts here. The first one talks about promoting balance in tax administration, while the other is gender equity and taxation. So I'd like us to begin with, the first, which is balance in tax administration. What does this entail?
So I think firstly, if we look at taxes are the largest and the most sustainable source of revenue for any government. And looking at this, we need to have tax equity in a broad sense, which refers to having a fair and just tax system. Now, what that means is that you need to have the tax burden being distributed in a manner that is considered fair amongst its taxpayers. And we need to ensure from a tax administration point that we are collecting the right taxes. And this is important because if we look at the way governments develop and the way we have sustainability in terms of our development, taxes plays an important role. And that important role is that we need to have, firstly, I think foremost, most important, is there needs to be trust between the state and the citizen. So we need to make sure that the right taxes are being collected from the right avenues. So from a tax administration perspective, in order to do this, tax administrations are the implementers of tax policies. And we need to have, tax administrations that have the capacity in terms of the resources to be able to collect the taxes. So on the one hand, you need to make sure that you have compliance, but on the other hand, where there's non-compliance, tax administrations need to ensure that they have the right enforcement capability to be able to go after those transgressors.
All right, Varsha, let me come in here. Let me come in here, Varsha. I'd like us to look at this also. There are those who would wonder if there is a correlation, between gender equity and taxation. So I'd like you to help us understand the relationship between the two.
Okay, so gender equity intersects with tax equality, and that is through, again, its tax policies and its administration. You mentioned earlier about the informal sector. So most often when we look at taxes, we're looking at the formal sector, and we don't pay a lot of attention to the informal sector. But if you look at from the African perspective, there's a lot of women that are participating in the informal sector. You also mentioned, I think, indirect taxes. Now, as we know from a African perspective, there is still the taxes that we collect. And if you look at the Africa Tax Administration Forum's flagship publication, which is the Africa Tax Outlook, you will see that there is still a disproportionate collection in terms of between direct and indirect taxes, with indirect taxes being much more. And African countries heavily rely on VAT, value-added tax. And if we bring it back to the gender, you would find that those that are heavily affected are the lower income households, and which is a lot of times also women, and there is a lot of single single heads in terms of households, and that are women on the continent. We saw with COVID-19 the disparity that came in terms of care, where women, held most of the burden, and you also have seen that, in terms of childcare as well. And that is where we need to find a balance in terms of looking at and developing tax policies that are promoting gender equality. Now, if you look at many countries on the continent, there is still a very little funding that goes towards programs that promote gender equality. And ATAF recently did a research as part of the ATAF Women in Tax Network, and we found that governments actually struggle to fund some of these the gender policies and to advocate for it. So what we need in order to get to more gender policies is we need political will. We have, at an international level, we have the Sustainable Development Goals, and that advocates for gender equality. But we need that to be taken in at a national level so that we can develop these policies. Now, as part of this research, there were also 3 countries that are doing really well, and one of them is Rwanda. So when you talk about, development of tax policy, and when you want to move towards a more gendered and equality in terms of your tax policies, you need data, right?
Absolutely.
Now, if we look at the Rwanda example, Rwanda in 2021 has developed a gender strategy. And as part of this, they have had some really great results. One of them being a comprehensive gender disaggregated statistics.
All right, Varsha, I like how that you've been able to, show us the intersection between gender equity and tax equity. Now, talk to us, what initiatives, are being undertaken to promote gender balance within African tax administrations? I know you were giving an example before I butt in, but of course, let's look at it holistically now.
Okay, so a few things that needs to happen. The one is we need to advocate for gendered policies. And to do that, we need more women to be around the table when we're developing tax policies and that are part of the decision making. So from a tax administration and a Ministry of Finance perspective, you need to bring more women that are part of this journey. And a good example was in South Africa, for example, as well as in Zimbabwe, where they've done that, as well as in Rwanda, where they've brought women to be part of the decision-making process. The second is very important. To make decisions, you need gender disaggregated data. So the statistics is really important. And as part of this, from a ATAF perspective, we are looking at the collection of gender disaggregated data that will form part of the ATAF flagship publication, the Africa Tax Outlook. And how we're going to do this is to look at the example, for example, from Rwanda, where they've started to look at the individual taxpayers and then
Varsha,
to broaden that.
Thank you so much, Varsha Singh, for sharing your thoughts with us on the show today.
Thank you very much for having me on the show today.